Good morning, everyone. How's everyone today? Good? Great. Friday. And many of us going home today. So great. Thank you very much for joining us in this session that we have prepared extensively. Has been very interesting among us to prepare the session, sharing a lot of our experiences, and so we hope that we can share a lot of that with you, and also we would love to hear many questions and just have a live conversation here. That would be the idea. So my name is Lisa Guzman. I work for Acción, an organization working in financial inclusion for quite some years. We do impact investing advisory services for financial services providers, and we also do a lot of research. I'm in particular in charge of our gender agenda within Acción, working with different partners across different regions, and that's what I would like to share with you about today. And here in the panel, we are with Rani Deshpande from CGAP, with Sheila Wonson from EMW2024, and with Kwame Abrokwa from Fidelity Bank, who is online. Hi, Kwame. All
Hi,
right.
guys. Hello.
Welcome. Thank you for joining us from Ghana. So
Thank you.
let me introduce Kwame. Kwame is the lead for sustainable finance at Fidelity Bank based in Accra, Ghana. He manages the bank's strategic partnerships with development partners and international funders, helping to define and execute a strategy and project implementation. He has more than 15 years of development finance experience in investment advisory, fundraising, and consultancy across sub-Saharan Africa. Previously, Kwame worked as an investment professional at the International Finance Corporation, facilitating investments and advisory services in West Africa across several sectors, including financial services, education, and agribusiness. Kwame serves as West Africa Chair for Vassar College Alumni and Admission Program and is an alumni mentor for sponsors for educational opportunity, a U.S.-based nonprofit providing career opportunities for minorities and underprivileged youth in Ghana. So welcome, Kwame. Thank you for joining us today.
And as Lisa mentioned, my name is Rani Deshpande. Nope. Okay, here we go. As Lisa mentioned, my name is Rani Deshpande, and I'm a senior consultant working with CGAP, along with my co-conspirator, who I want to recognize here, Anthony Koning, is sitting in the front, on a particular initiative around young women's financial inclusion, and we'll get into that in detail a little bit further down the line. But right now, I want to introduce our other esteemed guest. Sheila Guanzon is General Manager for Operations at NWFT, a 40-year-old microfinance organization in the Philippines. A computer science graduate with a master's in business administration, she joined NWFT in 2001 as an MIS manager, and in 2008 moved to the operations department, which during her tenure has grown from 39 branches to 302 branches. So please help me welcome Sheila.
Thank you so much, Rani and Lisa. So for this morning, it's such a good weather, right? I only have 3 minutes to talk, but basically NWTF is a microfinance organization in the Philippines, one of the pioneer microfinance organizations in the Philippines, and currently we are serving more than 500,000 clients with around $100 million portfolio. Currently we have both financial and non-financial services. 99.9% are women of our clients. There are men, but these are replacements of the women that we served after life. So yeah, that's NWTF.
Thank you very much, Sheila. And I don't know, Kwame, if you want to give a short introduction of your role and the bank?
Yes, sure, absolutely. I hope you all can hear me. So as Liza mentioned, I'm Kwame Abroko. I'm the lead for sustainable finance at Fidelity Bank based in Accra, Ghana. Fidelity Bank is the largest privately held indigenous Ghanaian bank. We're a top 4 bank in Ghana, balance sheet of about $1.4 billion. We have over 3 million customers. I'll say about 60% of that are male and 40 by women. We have 126 ATMs, over 80 branches, and an agent network of over 10,000 agents spread across all 16 regions of Ghana. We are known to be the bank that pioneered inclusive and agency banking in Ghana. We are very much focused on the unbanked and underserved, and we're very happy to be participating here. I help to lead sustainable finance, where we basically partner with development partners to promote projects that support the SDGs. So currently we have projects around in agribusiness, financial inclusion, supporting young entrepreneurs, and obviously also a gender-oriented program that provides affordable access to finance for female SMEs in agribusiness. So very happy to be here and look forward to our conversation. Thank you.
Thank you, Kwame. Okay, so am I on? Yes. So moving forward now with the panel. So the intention here is I would like to share with you and maybe to set the framework a little bit for the conversation that we will have today. What has been our experience in Acción in terms of putting together a framework to support organizations of all levels and at different maturities to move along the journey from becoming really gender transformative organizations. So before getting there, and just to be sure that we are in the same page, I just wanted to share with you again some statistics that I'm sure that you have very in your memory already. And so just to say here, like there is still obviously a big gap in gender. It is different depending on the region that we are working on, but still there is a lot to be done in terms of access to financial services, of course, but also in order to really put together a system that supports women from different perspectives. So when we see the problem with these figures that you're seeing in the screen, we think of like what is to be done from the supply side and what is happening from the demand side. So I think like we all know, and after this conference, we're very clear about the different problems, sub-problems that complement the big issue that we're trying to solve here. So when we talk about women's financial inclusion, we're talking about women being having problems, first of all, accessing financial services, either because there are social norms that are impeding them to access, because they don't have access, or they don't have the right financial education or financial capacity to have access, because they don't have the confidence to use technology, because they don't have access to technology, because they don't have agency to make their own financial and other decisions, etc. So there are many sub-issues that we know about. But I want to also to focus here more on what has been our observation and what is so far our conclusion that what we have been learning from the market about the problem from the supply side before we jump into talking more about the clients. That is what Ryan is going to be talking more about. So as I was telling you, Acción works with investment funds. So it means that we invest in fintech, we invest in like very early stage companies, we invest in more mature financial institutions, microfinance entities, digital platforms. So more or less, and without saying that we can generalize, but in general, what we see is that institutions are having a big problem, first of all, on trying to or being able to define the business case for being intentional. And so when I say business case, it's not that they are not aware that there is a gap, and obviously there is a market that they need to tap, but they many times don't have the information that they need to be able to build that. So they keep having or only have the information of their current clients, how they pay, how many times they apply for a loan, what is the balance that they have in the savings account, like all this information, which is obviously important, but they are not making the extra effort on having a very clear sex disaggregated data approach. And so when they don't have that information, it's hard to identify, hard to see what are some other insights that might help them not only to do a more expedite credit process, but also about like how to put together a communication strategy, how to put together a capacity building effort, how to make sure that women are not complaining about the processes that they have in their branches, et cetera, et cetera. So that's a big challenge that institutions face. The second factor that we're seeing is that even when they have some sort of data, they don't have many times internal capacity, time, etc., to analyze the data. And so it's just data that is in some dashboard somewhere, but there's nobody with the gender lens analyzing the data. And there is no connection between the strategy that they are having and the actual data that they have access to, if they have it. And the third factor that we are seeing is that there are many institutions that are very good at putting together this product or putting together this capacity building program, which is obviously useful, but there is no a clear plan to be sustainable. And so to be sustainable is about making sure that what they are doing today, this specific tactic, is connected to a more long-term vision of what they want to accomplish in terms of women's financial inclusion. So these three things, and I'm saying that's all. I can talk about also capacity building and like how they do things, and I'm going to get more into detail, but more or less this is what we think is happening. And so it's, we keep asking, why this is happening when the opportunity is so clear? And so here are other numbers that I don't want to read, but like, yes, I mean, everyone have said, like, I see all the consultancy firms, they have done like a lot of research and have provided us with information about how big is the opportunity. And in every market is like this. However, we still don't see a lot of intentionality. So based on these learnings that I'm summarizing here, what we have done, and I guess like the approach that we're taking in Acción is that every time that we're talking about, let's do a women's financial inclusion project, let's work with an institution on this, we are very clear and now very strict on saying it is not about designing a product. It's not that. It is about really supporting the institution to build a coherent story about being not only intentional, but being transformative, which is where we think is going to really make a difference, right? So of course the product is okay, having the strategy, having a very, not discriminating a recruitment process, all that is very important. But if we don't have coherence between what we're doing from the strategy point of view, from the board, all the way to the selling of a product, there's no sustainability, and so there's no future. So this is our approach, and just now to finish, and obviously you can see all this information in our website, but more or less every time that we are starting a project or having the opportunity to support a financial institution, we try to use this framework. And so there's a lot of detail here, but pretty much what it's saying is like we work and we tend to have the opportunity to work with institutions that are completely neutral, blind, which literally means that they haven't had the time, the intention, the motivation, the interest to pay attention to what it means to look at women, to make women visible in their business, to organizations that are aware, which means they recognize that there is a difference, that women and men behave different, that they both have different needs, and therefore they cannot be served absolutely in the same way, to organizations that are already taking actions, like the two organizations that we have here with us today, and we will learn from them a lot, to really being able to support organizations to become transformative, to be able to influence social norms, to be able to take the, in many markets, reputational risk of trying to influence regulation, community organizations, or in general society to start to think in a different way towards women. So this is the framework of our work, and happy to share more, obviously, after the session or anytime that you want. So this is what I wanted to share, and here is just to give you another, like, double click in the framework. And again, I don't want to get into detail, but these are just like the levels that we consider when we work with organizations. And this is, and you can think of like other components that you can work with, but we have identified, like, if we want to be effective when we're working, we need to choose, because it's sometimes different to work on everything. But so as you can see here is that we work on the, like, starting with the strategy, understanding the business case, what is the market opportunity, to go and work with the product development part, the risk management, data assessment, and capacity building. And so across those lines, there is, an institution can be neutral, intentional, or transformative. And so that's kind of like the way in which we are approaching things. And so this is the framework that I will be using today to have the conversation with our two institutions here, right? But before that, I think, like, Rainy, you also want to share.
Yes, thank you. So I think the framework that Lisa just told us about is an excellent way of thinking about how you integrate gender intentionality at all levels of the organization. Our lens on it is one of those levels, and that is at the client level. So I want to start by asking you, let's see if this works. What do you see when you look at this chart? Just take a minute to look at it. What it is the adoption or penetration rate of ownership of any account according to the last Findex data to 2021. By age and by sex. So that red line is the women's line, and that purple line is the men's line. So what we saw when we looked at this chart, and this is what motivated in large part our work on young women's financial inclusion, is the striking equality of those lines between the ages of 15 and 17, and then the divergence that happens right around the age of majority. Never really to close again. There's that blip at 37, and so congratulations to all the 37-year-olds are out there making gender equal and financial inclusion. But really, statistically, when you look at it, there's no statistical difference between 15 and 17, and then every subsequent age group, the statistical difference is real. And so that brought up a lot of questions for us. One, why is this happening in early adulthood? What can be done about it? And what difference would it make if we actually closed this gender financial inclusion gap in early adulthood, or never even allowed it to come into existence? Well, luckily, that third question is something we know something about, because we know that it would make a difference. Young women's outcomes are pivotal. I probably don't need to tell anybody in this room that. To economic growth, to child mortality, to employment, to take just one statistic. A child born to a woman who can read is 50% less likely to die before the age of 5. Just let that sink in for a second. So young women's outcomes are not only important to them, but to society at large. And yet we know their outcomes are not as good as their male peers. Double the proportion of young women in the world are neither in employment, education, or training. That's what that NEET means. About a third of young women versus 16% of young men globally. In sub-Saharan Africa, to drill deeper, 18% of young women are married before the age of 18. And that's compared to 4% of young men, so many, many times greater. So we know that there's a gap there. And we also know that financial inclusion initiatives, if they're well-designed, can help with some of these outcomes. Last year, we did a research review of both rigorous, sort of gold standard randomized controlled trial research and gray literature that concluded that well-designed financial inclusion initiatives can certainly help with financial outcomes. That we know. Financial attitudes, behaviors such as budgeting and planning, savings balances, we know that that has an impact. What also came through in the literature is that when financial inclusion is combined with other initiatives, other sorts of supports and interventions around sexual and reproductive health, psychosocial empowerment, education, financial inclusion can also contribute to improving those outcomes, which is, arguably what really counts. It does that by increasing participation and retention in the programs without necessarily harming the levels of engagement in school and educational activities, which is what a lot of people worry about. So that question is answered, but that leaves us with another question. So what does well-designed mean in this context? What are appropriate financial inclusion mechanisms for young women? That also is something that turns out we know something about in this industry. Financial institutions and youth support organizations, NGOs, government agencies have been iterating on this question for almost 2 decades. And so before doing anything else, we wanted to take stock of what we knew so far, what has gotten us here. And so we reviewed all the literature, published and unpublished, that was out there. We did it, so you don't have to. We talked to over 30 expert implementers, and this research was then reviewed by over 40 industry experts that we reached out to through FinEquity. And that resulted in this publication that just is hot off the presses about 2 weeks ago. And that's what I want to run you through quickly today. So it turns out that what appropriate means and what well-designed means for young women depends on which young women you are talking about, because this segment, as we know, is far from homogeneous, and we're really focusing on the ages between 15 and 24 here, because that's when a lot of those key transitions happen. In age, from legal minor to legal major, which determines your access to financial services in the formal sphere. From spending most of your time on studies to spending most of your time on work, be that paid or unpaid, so occupational status changes, and in family positions. So are you sort of in more childlike position in a family? Are you economically dependent on others, mostly single? Or do you have adult responsibilities, caregiving responsibilities already, and do you tend to be partnered? And all of that is also affected by contextual factors such as social norms, rurality, household socioeconomic status, which determine or which affect the way in which these transitions happen and when, and also how they translate into financial characteristics. So this is what is of interest to designers of financial services. In general, the characteristics that cluster on the left side of the diagram are similar in that they result in less access to formal financial services infrastructure, less access to and control over resources, more dependence on others as a result, and less complex financial needs. Whereas the characteristics that cluster on the right side are the opposite and feature more access to formal financial services infrastructure, more access to and control over resources, more complex financial needs. Now, for simplicity and shorthand, we have labeled these groups of segments as dependent and independent. Now, I want to stress that those are not segments in themselves. They're groups of segments. So, a segment doesn't need to be legal minor and student and, economically dependent to be considered on that left side. It is more a question of degree, because not all of these transitions happen simultaneously, and not all the poles are necessarily mutually exclusive. But that's what makes good formative research so important. Because that is really going to affect the financial inclusion strategies that are most appropriate for the target segment that you're focusing on. So just very quickly, what were those strategies? The research indicated that they fell into 5 main categories or components that were really important. One was product design, so what kinds of financial services and products are you offering? Are they more savings focused, which is much more appropriate for the dependent side of the spectrum? Or are you dealing with a more independent segment that has use cases for a much wider range of financial services, credit, savings, insurance, payments? Are more informal channels going to be more appropriate to your target group because, let's say, their age? Or can they access more formal financial services? The second element that is key to consider is the product delivery. So how will the young women that you're targeting access the products and services on offer? This is a function of age, as we've seen, but also of costs and resources. And in terms of cost containment, for the dependent side of the spectrum, groups are a great option for consolidating transaction points, aggregating demand, whereas digital delivery, which can also cut costs, becomes more viable the closer you get to the independent side of the spectrum, where individual services are more available as well. The third key component to consider is financial capability building. So what kind of information needs to be provided along with the products and services to enable the young women to make the best use of them? If you're dealing with more dependent segments, they tend to have either be in school or have been in school more recently and may be more primed for learning in a classroom type situation. They may also have more time for more extensive conceptual financial education. But on the independent side of the spectrum, these are young women who've already taken on multiple roles in their lives as caregivers, as workers, and time is at a premium. And so it's really important to focus on that critical minimum of information that's going to let them make the best use of the services on offer. The fourth element that's really important to consider is social intermediation, which involves decisions around what kinds of complementary services or gatekeeper engagement might be necessary to enable young women to access the services, even access information about the services, and for those services to have maximum impact on their lives. The need for these kinds of services, which could include livelihoods training, it could include sexual and reproductive health training, or links to services. It could include just talking to the gatekeepers in a young woman's life to allow her to access the services. It's the dependent segments that have much more need for them, whereas on the independent side, as the name implies, more standalone financial services become somewhat more tenable. And then the fifth element, obviously, is commercial viability. That is key to consider. And as you may have gathered, the cost of those complementary services weighs more heavily on the dependent side of the spectrum. And this is where partnerships become important. So thinking about how can the private sector be strategically brought in to provide financial services on as cost-effective and viable a basis as possible, and where can other organizations, such as NGOs, such as government agencies, be brought in to partner to offer those services, potentially on a subsidized basis, that the market is not going to offer. The need for this and the horizon to profitability becomes shorter the closer you move to the independent side of the spectrum. But even here, it's very important for financial institutions to take a long-term view, to take a life cycle view of the value of these young women as clients. But if they do that, and if they can offer a ladder of age and stage appropriate financial products and services, there is evidence that women in particular can become more loyal, less risky customers for financial institutions in the long term. And that is what we're going to talk about in part with our two guests. So I'm going to hand it back over to Lisa to start off the moderated discussion, and then we'll have time for questions and answers at the end. So please prepare your questions, hold your questions. We look forward to an engaging discussion. Thank you.
Yeah, thank you, Rani. Congratulations on the research, super, super interesting. So, yeah, let's start this conversation. I feel like we all want to hear more from you both, Kwame and Sheila. Maybe I want to start, reflecting on the framework that I presented at the beginning. I think like we all would love to hear from you. Where are you in the journey, and what has been the experience so far? And obviously there are maybe two different organizations here, like one, like the EMW2024 organization, who has been completely focused on women, whereas for Fidelity has been more as a journey, right, Kwame? So maybe, why don't you, Sheila, you start sharing with us, please, how that has been?
The journey was very long because we are a 40-year-old microfinance institution. When we started intentionally, we really just wanted to have our late founder, Dr. Cecile del Castillo, really wanted to just empower women. But the thing is, how to empower women is quite a complex way to do it. And in the Philippines, for example, the women we call it ilaw ng tahanan. It's a local dialect, and that means in English, it's light. It brings light and brightness in the family. And from that concept, our founders have thought of looking at a method or a system that would empower women by means of helping the family as a whole. So it may be the women that are intentionally the primary clients, but it's really at the back of their minds, it's really the family members that would be the ultimate help in that method. And Lisa was mentioning about transformative, and it's actually the transformative is really looking at what is the ultimate goal of the women. Intentionally, maybe it's the women, but what's the ultimate goal? And with NWTF, what we do is we may be a financial institution, but we really understand what are the needs of these women. It's not just about financial aspect. It's not just about borrowing money. But in our experience with NWTF, we always start with what are their dreams. I mean, the women would always have a dream. I think everybody would have a dream, but more so the mothers. And the top three dreams of the mothers are education of their children, the wellness of their family, and having a business of their own to help the whole family. And so from that dream of each woman, we draw out the product development in coming up with a product that will address the top three needs of the women. And we concentrated on those aspects in transforming the lives of the women and their family members.
Mm-hmm. Thank you, Sheila. Thank you very much for sharing that. And Kwame, can you share with us how has been the journey for the bank in the recent years, at least? Thank you.
Sure, great. And very interesting insights so far. So for Fidelity Bank, I think we have always recognized that women are really the backbone of the Ghanaian economy, right? So maybe just to give you some background and some statistics. So in Ghana, women account for approximately 50% of the labor force across all economic sectors, be it from agriculture to industry to services. When it comes to the MSME sector, the micro, small, and medium enterprises, women play a significant role as well. MSMEs represent, let's say, about 90% of all businesses within the private sector, and they contribute more than 70% to Ghana's GDP. Recently, there was a World Bank report that said 44% of all MSMEs in Ghana are owned by women, and women Ghana is one of the leading countries globally with the most female entrepreneurs. So clearly, as a bank, we recognize the significance of women within the Ghanaian socioeconomic development sector, and therefore the need to support them more, right? So I'll say over the past few years, specifically starting in late 2022, we commissioned a gender action plan with Value for Women, which is a gender advisory firm, in partnership with our shareholder African Invest and also BIO, which is a Belgium-based development partner. Basically, this gender action plan project was supposed to, help us enhance our gender inclusiveness when it comes to enhancing our existing products, to become more gender intentional, and ensuring that we are addressing both financial and non-financial needs of our women customers. Also, we started to look internally, within our organizational structure, our culture, and the way we manage talent to make a more conscious effort to have a more equitable representation of men and women across all levels of the organization. And obviously, we're very pleased that we're just now starting a new partnership with Acción. That will help us strengthen our approach to, infusing more targeted gender intentionality into our existing products and services, both financial and non-financial, and also helping us look more closely at sex disaggregated data collection and analysis, and also working with internal organizational culture and talent management. So I'll say it's been a long journey. We have the full support and commitment of our board and senior management, and we're very excited to be on this journey with Acción and with our development partners as well.
Thank you, Kwame. So I think that we have here in the room, I hope like some financial institutions, microfinance institutions, like who's representing a financial institution? Okay, quite a few here, Kwame. So why don't you tell us what has been maybe the two biggest challenge that the bank has had in the journey? Like you can share here, like this is what we faced and this is what really happened, and maybe also how do you think like being intentional has paid back to the bank? What would you say?
Right. Yes. So maybe I can give on the internal, the organizational side. Clearly, elevating gender as a core part of our strategy. We required internal alignment, right? So internal alignment, both from the board level, executive management, and thankfully they were all aligned. But again, this has to percolate down into the entire organization, because people were sort of quite used to business as usual, right? So now when you want to make gender a key part of your strategy, you have to sell that idea and get internal buy-in. So that took a while, but I think eventually we got there. Secondly, issues around lack of data, right? It's very important for us as a bank that whatever we do, we have the ability to have real tangible data that can then inform us in how we design relevant products and services to address specific and targeted needs of our customers. It's very difficult to get data readily available in our context in Ghana. So there was a need to deploy boots on the ground and sort of do first-hand research on the ground by going into the communities, engaging with actual women customers, women business owners, seeing what their pain points were, identifying gaps, and then designing products and services to address these gaps. Thirdly, I'll say that also within the organization, culturally, we have a staff of about 1,200, roughly thereabouts, and we realized that within the organization, obviously there are a lot more males than females, about 60-40, and that there was a need to identify high potential women who tended to be at the lower levels, to identify them, to have strategies in place to promote them, and also ensure that we retain them through various strategies, whether it be having a mentorship program in place with some of the senior executives who are women, making sure that even how we recruit people, that we were targeting specific sources that would give us access to more females applying for jobs, building the internal confidence of high-performing women to take up new roles and sort of expand and grow their capacity, having targeted training programs, etc. And I think this has really paid off well. For our customers, we have a more loyal customer base. We've built a stronger brand equity as a gender-inclusive bank. We have Liza was just in Ghana. We visited a few female entrepreneurs, and they all were very grateful to the non-financial support and affordable funding that we provide to women. I think I was very touched because, a lot of times as a bank, you tend to focus on the access to finance in part, but you also recognize that some of the non-financial services are really what's the game changer, right? So you have a lot of women entrepreneurs tell you that, look, Entrepreneurship is a very lonely journey. And as a bank, we have various programs, various conferences, various gatherings that bring their peers together so that they can network, they can exchange ideas, they can discuss some of their common challenges. And this was very much appreciated because, as they say, it's a very lonely road as an entrepreneur, and they don't have a lot of opportunities to network and link up with their peers. Also, we had a program where we focused on mental health for female entrepreneurs. And again, this is not common, this is not typical, but again, it's something that they really appreciated because, they can sort of see that their challenges are not peculiar to just them alone, and that it's a common, they're sort of in this together. So I think it's really paid off for the bank. We've also been able to distinguish ourselves as a partner of choice for both local and international development agencies. So we have programs focusing on gender with the MasterCard Foundation, with the Netherlands Enterprise Agency, with the United Nations Capital Development Fund, etc. So, it's definitely an area that we are very committed to, and we hope that we can reap the rewards, not just for ourselves, but also for our customers, and particularly our female customers.
Thank you.
Thank you.
Thank you, Kwame. Well, no, great points on internal alignment, data, leadership, and a more comprehensive program, not only access to capital, but to non-financial services as well. Thank you very much for that. So I think, Rani, if you want to continue with some questions, I know that you're eager to ask today, so please go ahead.
Sure, thank you, Lisa. So the slide that we showed before, the two diverging curves, that's a pattern that is valid for across low-income countries, but obviously each country has its own specificities and its own patterns. And I'd be curious, zooming in on young women now, I'd be curious to hear from each of you what you think are the main barriers to young women's financial inclusion in the Philippines in particular and in Ghana in particular. And maybe, Sheila, we'll start with you and then go to you, Kwame.
Well, for NWTF, we really don't have a special segment for the young women because, for one, there's a labor law in the Philippines where below 18 cannot work and cannot be employed. So that's one of the limitations. And we really just focus on the needs of the women from 18 years old and above. So, yeah.
And aside from the law, what do you think it is that prevents the 18 to 24-year-olds from taking up financial services in more numbers?
In our experience, one of the challenges really of the poorer women is the access to financial services because they don't have assets. And many of them don't have appliances, don't have savings, these kinds of things. And so that's one of the limitations. And what NWTF does is to really provide an opportunity. But even if they don't have that much assets, low income and low savings, we still provide opportunity for them to take small loans and to start up a business. We're actually one of the few microfinance organization in the Philippines that provide or extend financial services to women who doesn't have business and who would just want to start up a business.
And so I think that's a really good point that you raised, that the barriers to women who are just starting up, which tends to disproportionately be young women, are very high, so that's a great initiative. Kwame, I know that when we spoke, Fidelity has a pretty impressive sort of ladder of products and services. So I'd be interested to hear how you developed that, looking at young people's needs and young women's needs in particular. You mentioned before that you go into the markets, you do research, you use data. I'd be curious to hear a little bit more specifically, what was that process that you used to develop the various products and services that Fidelity offers to young women? What were the products and services that resulted, and how are they performing?
Right. Yes. If I can just pivot that on the back of sort of the main barriers and challenges that women face in accessing financial services, I think it's quite similar to what's been shared before. So here, there's a big sort of tradition around cultural and social norms. So women face traditional expectations, whether it's, that they're meant to be sort of more caregivers or homemakers and not necessarily business owners. Also, particularly in male-dominated sectors. So, for example, if you take a sector like, whether it's manufacturing or financial services, etc., construction. These are sort of very significantly male dominated. So getting acceptance and having your idea being taken seriously is a very difficult barrier to overcome. Secondly, lack of property ownership, which therefore affects their ability to have collateral to access loans or access credit. It's a big issue. So in Ghana, traditionally, particularly in the rural areas, property ownership sort of is limited to women, and so this makes their accessing loans very difficult. And then thirdly, I'll say lack of financial literacy and capacity and sort of capacity and skills. Is a big thing. We did a survey once in the market area where we asked market traders, so market women, what is the number one source of how they receive financial literacy? A lot of them said through their friends and their family and friends. A lot of times we know that this conduit isn't always sort of the right or preferential channel to getting financial literacy. You would rather prefer to get financial literacy from your banking partner. But there's also significant amount of trust issues when it comes to some of the market women with banks because they think banks are too expensive, banks have high charges, etc. So what we did was, we have a pretty wide inclusive banking and agency banking footprint across the country. I call it a sort of last mile eyes and ears on the ground. So we literally go into the communities, we talk to people, we engage people one-on-one about what their peculiar needs are. A lot of the women we found they save their money through the traditional model, which we call SUSU. So it's like a peer lending, peer savings group where they save among themselves and then they borrow among themselves. But it's very sort of very unregulated, informal way of doing things. So we said, okay, how can we design a low KYC digital account, which we call a smart account, so that within 5 minutes, we can literally register you digitally once you have a national ID, and then we can open a digital account for you on our banking online platform. So we call this account a smart account. It's a very quick way of making the excluded become financially included, and also allow them to do basic banking transactions. So, debits and credits, they can save their money, they can transact, they can use it to do online transactions, online payments, etc. And then also to address the financial literacy challenge, we employed USSD technology and also IVR technology, which is the interactive voice response technology, where customers can dial a toll-free number and get access to a menu of financial literacy content around how to save, why is it important to save, what are the benefits of saving, all the way to effective budgeting planning. How do you make a budget? How do you plan for a budget? Also around how to invest and save your money. because you recognize that a lot of female entrepreneurs, particularly the market women, they just keep their money. They don't really save and invest their money. So having access to this IVL menu of financial literacy content, which by the way are recorded in their local language, right? So it's not just in English, but it's recorded in the local language in the specific community, was a great way to design sort of gender intentional products that were addressing a specific targeted need that we saw. So yeah, these are a few of the initiatives that we launched.
Example is that, you know, the KYC barriers you talked about, the minimum balance barriers you talked about, the channel deployment, it simultaneously addresses the barriers that young women face, but these are some of the highest barriers, so that if you can address them, which you have in this product, for young women, many, many other segments can access that product as well. So it need not be exclusively for young women to serve young women. I think it might be time to transition to audience questions. So if anyone has any questions, please raise your hands, and I think someone will bring a microphone from the back. Maybe can we have up here, and then I think I saw a hand on the other side as well. Okay.
Yes, hello, I'm Joël from Orange Money Group. Thank you for the insights. We can realize that there's not just a women segment, but many different groups. And so I wanted to know from your experience if you have any information on the way they behave considering credit. We tend to believe that it's better to invest in women and that even socially the benefit will be bigger. But how do they react considering credit? Do they repay the same as men? Are there differences between groups? I'd like to know more about that.
I think we probably all have perspectives on that. I will hand it over to Lisa and our other guests, and I'll come in later.
Thank you for the question. I think it's hard to generalize. I mean, behavior is very different anyways, depending on everything. Because what I can remember today around like the different behaviors, again, depending on the country, but I will say that in particular for young people, right? I cannot like the specifics on women, like for young people, what we are seeing in the researches that we have done recently is a huge push back to traditional financial services providers. They don't necessarily feel identified with brands of financial services, and they prefer to go with something that is more related to them. So any other brand that speaks to them, that has like a different kind of communication, is the gate to enter, let's say. So that's why, you know, like delivery platforms or digital platforms or any other kind of things are more successful today on like providing these embedded finance solutions for them. So that's what we feel like. They feel like more identified with these kind of brands than the traditional friends. So that's why, for example, like we are seeing many already, you know, like projects or initiatives of like traditional banks trying to create a separate brand, even with colors and everything, so they can have a different approach. So that's one thing that we're seeing. I think in terms of behaviors, the other part going to say like what is the difference? I think like in general, and we can have a discussion, but like in general, what we see is like women they need more information to make a decision when it comes to everything, but especially obviously to credit. And so it's like they made a decision, but they need more information and more support, like in terms of like having somebody to talk to. So it's more like a more in touch kind of relationship. That's what I would say. And again, like it's difficult to answer the question, you know, like in general. So yeah, I don't know, that's what I've seen, and I think maybe Kwame or Sheila also can provide information. Well, for repayment, I think like as Rani was saying at the beginning, like I think that there are several researches that show how women are better credit clients in many cases than men. The repayment rates are better, and not only that, but also the cross selling is more effective with women. Women tend to be very loyal with a brand, with a provider, and keep growing that. Not as fast as men sometimes in terms of the ticket size, but they are there. They're less willing to access other providers at the same time.
Yeah.
Yeah, go ahead.
Yeah, if I can just add on to what Lisa said, yes, we do see that women are better performing credits than men compared to men. You know, and also there is a tendency for female-owned businesses to identify their challenges a bit more early in the process, which then creates the opportunity for remedy and mitigating the challenges earlier, so therefore you have a chance of a higher success rate for repayment. So yes, that's factual as well here in Ghana. And as far as uptake, you know, so just by using an example of a project we have with MasterCard for agribusiness, yes, we have made it's a gender branded project which gives concessionary loans to female-owned agribusinesses, and both in our outreach and our marketing, we have targeted women specifically, and we've seen a high participation and uptake of this product when it comes to females. I think within the past, I'll say 8 to 10 months, we have affected over 4,000 women, smallholder farmers, and this is growing, you know, as well. So yes, both on the repayment side, better credits, and then also good, robust uptake for the product as well. Thank you.
For our experience, I would say women in particular, because, well, for one, NWTF has more women clients, so we cannot really say that men are bad or delinquent clients. But there are also aspects where sometimes the repayment is because of the affordability, the design of the product. It should be properly studied, or like for example, when we introduced before an agri loan, we thought that we do it on a weekly still frequency because we're used to that. But it's not really the right design of the product. So there are so many reasons why there is delinquency problem, but not in particular because of the gender. But I would say in our organization, because it's largely women, definitely women are much better as compared to men, because there's only less than 1% of the men that I can compare of.
Just quickly to add from the young women's perspective. So actually, we did qualitative research in 2 countries, and Ghana was one of them, Tanzania was the other, among women 16 to 24, and asked about sort of attitude towards different financial products. And these were very disadvantaged young women, mind you. And what we found almost universally was a real reluctance to at least start your business with credit. Most of the business capital that they had amassed was either they'd been gifted or like informally loaned something by a friend or a family member. Maybe if they belonged to a tontine or a Rosca or a VSLA or what have you, it sometimes came from that. Or they had saved it up. They had saved it up by working, by saving that, by turning that into a small business, by saving those profits and then amassing something greater. And that is why you might recall that, you know, we point out that the tools to store small amounts of value, to build resilience, to increase resilience to shocks, to reduce exposure, that is the foundational financial product. And I think that there is this expectation that young women, youth entrepreneurs, should be able to go from that saved up business capital to immediately taking a commercial loan. And we did not find that at all. That's an expectation I think that really needs reshaping. And I think Fidelity's sort of concessional loan facility is a great step in that direction, because we're finding the need for many more graduated rungs on the ladder between the startup stage and the readiness for commercial loans.
Mm-hmm. There was another question.
Yes. Thanks. Yeah, thanks. It's working now. No, thanks. I was just hi. I'm Aude Montague from FinEquity at CGAP. I was, when I looked at your graph with the blue and the red line, I was thinking, and you might be able to correct, but that young women, when they marry, start resorting to their husband's accounts for their financial needs, right? And with the risks inherent to that. And so I was wondering if any of the financial service providers on the panel had, been working on couples financial inclusion or couples counseling, or how to manage that, the woman's need within those accounts. And that was my question.
I know that NWFT, one of your hallmarks, is really looking at women as the entry point to the family. Do you have a perspective on that?
We actually look at the family income rather than just the women's income, but not because we wanted to look at the capacity to pay, but really looking at how they can grow their income as a family. Although the entry point is the women, but all other services, both for financial and non-financial, is leading toward the family. So we can extend, in particular, there are financial products and non-financial products that we extend not just to the women, but also to the spouses and their children.
Mm-hmm. I don't know if Kwame had a perspective on that. Kwame?
Sorry, I lost connection briefly. If you can repeat the question, if it's not too much.
The question was about, given how many women and how many young women also sort of leverage their partner's financial services and tools and accounts, whether you do anything that is focused on the couple as a unit rather than on the woman or the man particularly.
Yeah, that's a good question. So currently we don't have anything sort of specific to the couple, but I think in all of our marketing and outreach, we try not to do anything that would exclude men, if I can put it that way. Mm-hmm. So yes, we want to be gender inclusive, but we also are very much aware that a lot of our women, they are partnered, they make decisions with their partner. So it's important to also target them in some way, shape, or form. So perhaps this is an area that we can look more closely at in our work with Acción, and hopefully, we can have sort of a more targeted approach to couples going forward.
I will add, though, that I think that the importance of that approach really varies a lot by socioeconomic, sociocultural context. Right. I think there are contexts in which partnerships feature much more importantly in women's and young women's lives. In the two contexts where we did our research, what struck us was the prevalence of single mothers. And so that, I think, is a particular need in the cohort that we're looking at. Mm-hmm. There's another question?
Thank you. I would like to, Fidelity, my friend in Ghana, to make a comment on, I'm Patrick Watkins of Liberation Community Finance from Uganda, and we are largely focused on women financing in rural Uganda. We have noted that these young women, they usually perform well during their first, second, and third cycles. But as they evolve into middle age women, the PAR, their performance at risk usually tends to deteriorate. And our preliminary research has been mouth borrowing with different providers. So I want my brother in Ghana to make a comment on that and how has been the experience and how have they been able to tackle that issue. And lastly, I want to appreciate, I've learned today, we have been doing it, but not in a formal way like the research has picked it out, the gatekeeper engagements. We have seen, especially young ladies who are married, their money being taken away, usually coming to us to say, I don't want my spouse to know that I'm borrowing because in this case, I'm looking at the spouse as a gatekeeper, takes away this money from the wife. If the wife objects, then there's a huge likelihood that there will be a collapse at the family. So what has been the experience? What is the best way to engage these gatekeepers at different levels to support women financial inclusion, looking at it in a way that the entire ecosystem supports them as a family and as a community, contrary to being roadblocks? Because I see it many times when you request for recommendation letters from local councils to recommend these women who want to borrow, they usually refer to the husbands. They usually don't want to give them recommendation letters because they don't own property or formal chattels, and this is largely on group solidarity. So I don't know please speak briefly. How have you been able to overcome this? Yeah.
I think maybe we'll let Kwame go first while we think about the other question.
Sure. And thank you for the question, my brother from Uganda. So I think, what, in our experience, we for young female entrepreneurs, we have a holistic sort of approach, right? So we have what we call the Fidelity Young Entrepreneurs Initiative, which, basically starts with young women between the ages of 18 to 35. And we have various programs and projects under that umbrella. One of which is our program with the Netherlands Enterprise Agency called Orange Corners. So there, female entrepreneurs can get access to concessionary capital at 5%, which is relatively very affordable compared to the market rate, which is in the mid-30s. So if you compare 38% to 5%, that's very attractive. And we give them loans up to 50,000 euros, and part of that is in the form of a grant, right? So based on your performance, if we use incentives. So if you're able to make good on that loan and pay back, then we can migrate you to borrow larger sums of money to expand in our adjacent product, which is called the Fidelity Young Entrepreneurs Fund. Now, this fund is also concessionary, but it's at a slightly higher interest rate at 10%, and you can borrow up to 1 million cedis, to grow your business. So there's an incentive for you to migrate from the Orange Corners program, the 5%, to the 10% as we continue to support your business. And then from the 10%, then you can go on to other programs like our MasterCard Agribusiness Program and then our commercial product as well. Throughout your journey, we also have a very strong mentorship and business coaching support service, so that at every step of the way, we pair you with very seasoned, experienced business owners who have walked your journey, who can share their experience with you, can give you practical advice when it comes to sourcing raw materials, suppliers, access to markets, etc. And they work with you to grow your business, along with you throughout the whole way. So these sort of initiatives and solutions help to reduce the lack of performance of the loan, because they give us many opportunities to engage with the business owner, identify problems early, and course correct so that we reduce non-performance of the loans throughout the entire portfolio. When it comes to sort of how do we get men or the partners of these women to be more supportive, I think a big part of it is sort of again just being intentional about financial literacy and having programs that speak to this specific issue. So, in the rural areas, we do market activations. We organize training workshops where we bring people together. Again, we try to give them some incentives. So, whether it's distributing sort of freebies, T-shirts, giving free airtime for the mobile phones, etc. I mean, these are just small incentives to get them to at least be interested in sitting down and having a conversation, right? And then using these workshops and trainings to drive mindset and behavioral change, because yes, I mean, these issues are real. They do happen. You do find women who don't want to be as open with their partners about their business because of certain repercussions. But again, it starts with being intentional about engaging, about bringing these people to the table, having a conversation with them, educating them, and letting them understand that a woman who is empowered is not only good for the household and therefore for the man, but it's also good for the community as a whole. Thank you.
I'll just have a quick probably example of what we do with NWTF on how the husband or the spouses support the women. We have a very unique process with NWTF. We call it income generating survival skills. So what we do is we walk through the family where the women and the men are involved in looking at their current and their future. And that's how they become very supportive of the journey of the women or the woman towards the sustainability, the financial sustainability of the family.
Well, I think the time is over.
We're happy to stay.
Yes.
Stay, but
Yeah, I don't know. Yeah. Okay. So I think we're kind of answered the second question, but I would like to ask everyone here also about your opinion on that regard. This different perspective of like involving the family. Like, should we talk about women's financial inclusion? Should we talk about families' financial inclusion? Like when one or the other, and what might be the factors influencing, like the different approach. So I see people from different organizations, regions. We'd love to hear your opinions. Who would like to share?
Everybody are
Yeah.
yeah.
It depends. Yes.
Just my quick. Hello. Yes, my quick view about that was the first eye opener was that women are not a homogeneous group, and I think that we cannot, considering the way the society is organized, especially in sub-Saharan Africa, we cannot consider women without considering their ecosystem. Yeah. It has to be a holistic approach, considering the children, considering the husband. So I think it cannot be just women.
Thank you. Yes, please. And yeah.
I'm Ruhidas from Bangladesh. Really, we are also covering the whole family. So we have two luni, first luni and second luni. Always the female is the first luni, first borrower. And mainly husband, he is the second borrower. In our experience, we have seen if both are together, then the business is running well. in cases like sometimes it is divorced, then the first borrower or the female borrower, they said, I have given all my money to husband and now I am not with him. How to recover this? So this sort of various experience, so we made it 2 borrowers. And to say that all the bank accounts in the name of the female member. So almost 100% account holder is our women member. So thanks a lot.
Interesting. Thank you. Do you have another opinion over there? There are 2 more opinions. Thank you.
I think I have different opinions or controversial opinions on this. Okay, there is a family financial inclusion. If we talk about family financial inclusion, all the household members, they are inclusive. But particularly for women, there is really a big barriers. Like if we talk about family financial inclusion, mostly women are, the biggest barrier for women are especially when it comes to collateral requirement. You mostly, in most cases, men are the owner of the collateral in developing country context. Secondly, especially for banks and MFIs, there is this issue of guarantorship. When someone wants to take, let's say a woman want to take a loan from any financial institution, there is that tendency of, okay, are you going to bring a guarantor? And the men need to come and have that guarantorship. At some point, they refuse, or at some point, you realize even the loans are not making an impact because at some point they go and share the dispersed amount. To me, okay, there is the whole financial inclusion context, but also we need to kind of segregate by gender.
Okay. Thank you. And maybe last.
Hello, good. I'm Ellie from NWTF. I think my realization now is you referred to the young women, and these are Gen Zs, right? So these are practically digital hashtags, young women today. And what we're finding out right now is they are becoming more emotionally conscious. They do not want to be discredited online. So it affects their behavior, especially when it comes to the different innovations that we come up with. So even if they are very innovative, even if they have big dreams, they also don't want to be judged for the decisions they make, especially when they post it or if they share it with their peers. So I'm curious, Rani, in the research that you made, was there a focus on how, because these young women, they're, with that stage in life, they have already a lot of transitions physically, but was there a certain perspective on how they see things from an emotional or a psychological perspective in terms of how they will transition from the first to the second category? The group that you mentioned.
Sorry, the first to the second category, can you just specify?
You mentioned earlier...
from the dependent to the
dependent
independent.
to the... Yeah.
So here's where I think it gets... that was a gross simplification, and here's where it gets to look more like a kaleidoscope than a spectrum. The transitions happen at all different times, in different ways, along different dimensions, in different contexts. So, I think in previous research I've done, what you talked about around the reservations of young women to put themselves out there online and risk criticism, I think that is much more salient in a context where there is really high penetration of digital media, especially in that generation. In the context in which we did the most recent research, for that particular segment of highly disadvantaged young women, the penetration of the social media was not that high. But I imagine that if you went to a more urban setting, a slightly higher socioeconomic level, you might find resonances of that. So I hate to give you this example, but I think it's an "it depends" example. But returning to the gentleman's question from Uganda, I mean, I think one thing that we can say sort of more broadly is that when it comes to women's empowerment, I think overall it's two approaches, right? You can either circumvent gender norms or you can transform gender norms. And sometimes you need to do both, not necessarily in that order. So I think, the provision of privacy, as our friend from Bangladesh pointed out, in terms of making the women the account holders, and if there's some guarantee of privacy and what digital can do to guarantee privacy, can be a very effective way of circumventing gender norms. Yes, the gender norm is still there. The man is the owner of most of the assets in the household. But if the woman can be given some way to go around that through a private account, that can be a powerful way of slowly undermining that gender norm. Now, on the other hand, it's not going to be sufficient, so there have to be transformative efforts as well. And what are ways of transforming gender norms I've seen and heard to be successful? So I think there are different levels, right? At the community level, it's critical to find male champions, to provide that social permission for other men to participate in the changing of the gender norm. I think at the household level, there's been some good, rigorous evidence of success on intra-household dialogue, so couples financial counseling. I think at the individual level, something that's been tried with some success are called husband schools. Basically, it's a different way of socializing and making acceptable different patterns of gendered behavior, of male behavior, and there's a lot of information out there, sort of online, about those things. And I'd be happy to connect you. But I also want to come to Antonique here, because she is really the expert on gender norms, and see if you have anything to add on that point of how we best, when is best to circumvent them, when is best to transform them, and how you do that.
Happy to quickly answer, even though I know people are probably ready to go for lunch now. But I think that what we are seeing is that you need to do both, as you said, trying to circumvent but the first thing you need to know is which norms are actually influencing what kind of behavior. If these are norms that are very sticky, very strong, and very prevalent, it's very hard to transform them in a short amount of time. So then you need to focus on how can you work around so that you support the women while these norms are still being prevalent. But in some cases, either for certain subsegments, be it single young women, for instance, or in certain sectors, be it more urban versus rural areas, some norms might actually be relaxing. And I think that's where the opportunity lies, to actually say, well, the norm is already being disrupted by some, so let's support that further through some mechanisms, through some initiatives, so you can further reinforce that transformation. That's kind of a short answer, but I think all in all, I think the notion of engaging both men and women and creating a new positive view of masculinity, I think, is a really important one. And that is not just for our sector. I think with the recent developments globally, we all see the need for that. Thank you.
Great closure. I think there's nothing else to say, right? No, thank you, everyone.
Thank you.